This guy, Jesse Eckle, turned $3,000 into $28,000 in a month. By 2 months, that $28K turned into nearly $250,000. I needed to learn more. By the way, there are just 3 days left to join our new membership platform, Finova, and be eligible for our $10,000 giveaway on June 20th, on top of getting access to the best investor community on the planet, coaching every single day, trade signals, buy alerts, research reports, and a whole lot more that'll be linked in the description below. What's strange about this investment is it uses techniques from DAOs and Farming as a Service crypto projects. When I tried those things out in the past, it didn't go so well for me. So maybe 2 wrongs make a right, and maybe these ideas have legs, but they just needed a little bit of tweaking. So I decided to dig into the research. Research? This nerd is always going on about his precious research. I'm buying. Nah, I'm not letting you blow your money this time. Settle down. This thing pays 100,000% APY. That's nothing compared to the 2 quintillion% return last time. See, this is your problem. You think 1,000x in a year is low risk. Just be realistic, just once. Shut up. I'm investing 2,000. He's a lost cause. It's really not funny. He has child support due next week. But I guess he'll be the guinea pig for us. Until then, let's talk facts. Young APY traded $2,000 worth of BNB tokens for 21,000 Titano, worth about $19.83 after taxes. According to the account page, that'll pay $38 per day in profits, or about $1,500 in the first month. But that's chump change compared to the returns if this 100,000% APY lasts an entire year. If that happens, Young APY would be sitting on $1.9 million. For comparison's sake, I'm starting 3 grid trading bots on Pinex, but there's a twist. I'm doing $1,000 into Luna, $1,000 into Ethereum, and Dan here,
I'm Dan,
is going to choose my 3rd bot. If his choice beats either of my choices, he gets to keep all of the profits.
Oh, okay. I'll take that bet.
Okay, so which coin do you want to go with?
How about BNB?
Done. So we'll check back and compare these results with Young APY. So this investment Young APY leaped into utilizes auto staking. Basically how this works is you buy a token and that's it. It literally just sits in your wallet getting paid more and more tokens every 30 minutes. Seriously. Compare this to a DAO where you have to purchase tokens and then you need to painstakingly click a single button in order to deposit those tokens and then accumulate your rewards. Now, jokes aside, that is a little bit of a hassle when you need to trust websites, and let's say you're invested in multiple DAOs, now you need to track these multiple websites and whether you trust them. This is a better way if it can just sit in your wallet and accumulate rewards. But I had mentioned this is also kind of like farming as a service. With this type of investment, you pay a tax when you purchase or sell the tokens. This can be anywhere from like 4 to 15%. That tax then either goes to the community or to investments for the community. This project takes a pretty hefty tax of 13% for buys and 18% for sells, but they claim to do this for a good reason. They say that this helps them provide a stable yield of 102,000% annually. The project is called Titano Finance. The goal here is to address a major issue with DAOs. Those investments can offer millions of percent returns. The problem with a DAO is how they calculate their 1 million percent APY. You can technically make 1,000,000% in a year, but still lose money with the DAO. I know it seems impossible, but that's because the calculation is based on the total tokens, not the appreciation of your current tokens. So the total amount of tokens you hold can increase dramatically, but the value per token can crash at the same time. It doesn't matter if you have 1 trillion or 1 quadrillion tokens if they're worth nothing. You might be wondering, but how do they stabilize the price in Titano? Their token can fluctuate, so where does this guarantee come in? Well, first off, this is experimental. We don't know what will happen in a black swan event or long term. However, they attempt to stabilize the price in a few interesting ways. First is through that tax on buys and sells. A portion of this goes to what's called RFV, or risk-free value. Risk-free is probably a stretch of the phrase, but it basically goes into this fund that automatically buys or burns the Titano token in order to help stabilize the price. If prices go down sharply, this fund can buy the token on the open market and help push up demand pressure, again stabilizing the price. We can look at the actual wallet on the blockchain to see it currently has $11 million in it. Compare that to their $174 million market cap, and this fund can definitely have some influence over market movements, so this might work. Beyond this, Titano claims to be the only token that benefits holders if whales sell, which, not gonna lie, is an attractive tagline. However, this is referring to the 18% tax required when you decide to sell your Titano tokens. So it's definitely not an incentive to sell, but if a whale is up 1000x on their investment, which Titano happens to be since its inception, then I don't think a whale will let 18% slow them down too much. Before we get too crazy, let's talk risks. Besides the obvious of this being a completely new platform and relatively small token, they have had an audit done that revealed a few major things that need to be addressed. The recurring theme theme being centralization. According to Certec, there's some centralization risk because the project could theoretically send Titano tokens from the deployer wallet without full community approval. That would be bad. Another issue pointed out in the audit is the owner role within their contract has too much solo power. They can change basically anything from buy and sell fees to the liquidity and the treasury receiver. If that role was hacked, this would be the end of Titano. Now, these are big sticking points. However, it appears that the issues are being worked on in the version 2 of their protocol. So maybe you like this idea, but you know if you want to make absolutely massive gains, you have to get in at the beginning. You want another option. Well, Titano isn't the only project taking the DeFi world by storm. There's a new kid on the block who's already seen a ton of growth. This is another project offering near 100,000% APY at almost 2% daily return on investment. But of course, this doesn't come without its own risks. Done. Just purchase 2,000. There's nothing you can do about it. See, this is what happens. You guys gassed him up too much on the last video. Now he just interrupts me and thinks he runs this channel.
4 to 6 weeks later.
It's been a month and the results of APY's Titano investment are in. The deposit was set to pay $38 daily if the token price didn't change. And well, the token price changed. Badly. The total balance has shrunk to just $550. This is not good, but at least APY still has a second investment to bank on. All right, let's cover the details of APY's Sphere investment. He traded $2,000 worth of Matic tokens for 15,000 Sphere tokens worth $1,533 after taxes. According to the account page, that will pay $91 per day in profits for the first month, or about $2,700. Now, their calculator doesn't go for an entire year, but we can assume that projection would be in the millions if it did. However, in 4 months, this is estimated to pay $15,000, a 10x return in 120 days. All I gotta say is good luck to APY. Now, before we get to the results, how exactly does Sphere Finance work? Where do they get the money for nearly 100,000% APY? Well, they do call themselves the S&P of crypto, and you're probably wondering what that means, and same. But basically, by owning a Sphere token, you're investing into kind of an index fund of other governance crypto tokens. But how does that work? Remember the taxes on buys and sells in Titano? Well, Sphere has them too, 13% on all buys and 20% on all sells. That's why when young APY used $2,000 in Matic to buy that token, it ended up with a value of just over $1,500. They then use that tax for what they call a black hole of governance tokens from other protocols. This is essentially a treasury of funds that they then get to farm with. The idea is that the treasury will not only grow from taxes, but also with profits from yield farming as well. Now, there is something else I forgot to mention. Both Sphere and Titano have games, and by game, I mean more like a kind of lottery. How it appears to work is you buy their tokens, then you stake them for the chance to win a piece of their prize pool. Every additional token you stake is like another ticket in the raffle. This is another one of those things that's a bit untested, and it's all completely new territory. Beyond this, there's also a few points brought up in Sphere's audit that I feel obligated to point out. But first, the baseline test. How do you think your trading bot did? You just needed to beat one of mine.
Probably not good because things just are terrible right now.
So my bots were on Ethereum and Luna. And if you haven't seen the news, Luna completely collapsed when I was running this bot. So much so that Pionex actually just deleted the bot off of the platform. So good news is you won. Bad news, because the market also crashed, you won $7.
Okay, I'll take it.
So Sphere had an audit done, and the report had a few points of varying intensity. The biggest was the audit showed that Sphere's initial token distribution was sent to a single contract deployer, which is basically putting too much power in one person's hands. However, the audit report reveals that Sphere redistributed the initial token supply to an above industry standard 4-8 multi-sig, which basically means 5 out of 8 people would need to sign off on a major change for it to then go into effect. So thankfully, that issue, along with the others that Certec flagged, seem to all have been resolved. Given everything we know about these projects, the wild returns and the risks, how did APY's Sphere investment do? Well, in APY fashion, it did bad. Really bad. The $2,000 turned into just $252. I don't know how young APY comes back from this, honestly. I think I'll just keep these funds deposited for a year. This is an educational experiment, and we'll see what the massive interest does over time. What a roller coaster crypto can be. There's always a new project and technology promising insane returns, and it's hard to know what's legit. From here, I recommend checking out this video where I dive into the craziest investment strategy and story you have ever heard. You need to give this a watch.